It's lit up. Do I need to push it everything? Okay. Mhm. Mhm.
Good morning. The meeting of the Louisiana Tax Commission is hereby called to order. The meeting is being held at the office of the Louisiana Tax Commission at 1051 North 3rd Street, Suite 225, Baton Rouge, Louisiana. The date is Wednesday, February 12th, 2025. The time is 9 a.m. Please call the roll.
Chairman Rousseau,
Here.
Commissioner Leone,
Here.
Commissioner Romick,
Here.
Commissioner Guidry,
Here.
Commissioner Frazier.
Here.
5 present and a quorum.
Thank you. There being no business, we will defer the approval of the minutes to the next meeting. We will move on to the consideration of change orders.
Chandrika Banks on behalf of the Louisiana Tax Commission. Today we have a total of 1,287 change orders. Staff has reviewed those change orders and requests to approve 1,252 and place 35 in pending status. Staff requests approval of these change orders.
Mr. Chairman, I move that we approve the 1,252 change orders and place 35 in pending status for reasons given by staff.
We have a motion. Is there any discussion on the motion? Is there any objection to the motion? Hearing none, motion is adopted.
Chandrika Banks on behalf of the Louisiana Tax Commission. Today we have a total of 104 prior pending change orders. Staff has reviewed those change orders and requests to approve all 104. Staff requests approval of the prior pending change orders.
Mr. Chair, I move to approve all 104 prior pending change orders as reviewed and requested by staff.
We have a motion. Is there any discussion on the motion? Is there any objection to the motion? Hearing none, the motion is adopted.
Next items on the docket are the 2 appeals. Per our usual custom, we will swear any witnesses in at this time. So if you'll be testifying as a witness in either of the appeal hearings on today's docket for IMT or Southern Oil, I'll have you stand up at your chair. I'm going to administer an oath globally. I will indicate to you individually to affirm the oath with an I do, and have you state your name. Please raise your right hands. Do you swear or affirm the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help you God?
I do, Sarah Taylor.
Thank you.
I do, Karen Kahn.
Thank you.
I do, Brant Simons.
Thank you.
I do, Andrew Mize.
Thank you.
I do, Ken Carriger.
Thank you.
I do, Bob Adair. I do, David Porter.
Yeah.
I do, Michael Baker.
Thank you.
I do, Willis Carter.
Thank you. Y'all may have a seat. Chairman, we're good to proceed. I want to remind the parties, there's not a court reporter here. And so if either party wants to have a transcript prepared after this, you have to speak into the mic. The only way a court reporter will be able to transcribe this hearing after the fact is if the attorneys and your witnesses speak into a microphone. All right.
Okay, the first appeal we'll take up today is the appeal of IMT versus Assessor Sarah Taylor in the Plaquemines Parish Board of Review, docket number 23220750004.
Morning, Mr. Chairman, Commissioners Jason Brown and Blakely Ordez of Advantage Law for the taxpayer.
Good morning, Ellen Dunbar on behalf of the Plaquemines Parish Assessor Sarah Taylor.
Sarah Taylor, Plaquemines Parish Assessor.
Get started.
Great. Good morning, Mr. Chairman, and members of the commission. The first thing we wanted to note, and I've spoken with Ms. Dunbar, counsel for the assessor about this, is to note the evidence that we have done pursuant to a stipulation that was filed with the commission, I think in early January, maybe late December, but it includes the original Lat 5 that was filed, the original rendition, as well as the valuation report prepared by Mr. Bob Adair, dated September the 4th, 2023. And I have copies of those as well if we need to enter them into the record, but I don't know that we need to.
They've been pre-filed. If you recall, we were here a couple of months ago on a motion in limine where the commission had ruled to exclude all of the evidence pre-filed by IMT for being late under the case management order and under Louisiana law regarding when evidence should be submitted prior to the Board of Review Following that hearing, we did reach out to IMT and we were able to reach an amicable resolution regarding the entry of two of their exhibits, Exhibit 1 and Exhibit 2, since they were provided to the assessor's office prior to the deadline for appealing to the Board of Review. Our offer to IMT was to allow them to use those two exhibits at this hearing based on the agreement that they would not pursue the exclusion of the remaining exhibits if they appeal this further to the district court. So that is what the stipulation is based on.
Correct. Thank you, Mr. Chairman, members of the commission. I think we'll jump right into it and get our first witness. And tell me if I'm not speaking into the mic. Okay, great, thank you. Our first witness, who is the taxpayer representative, Mr. David Porter. Good morning, Mr. Porter. Can you please state your name and address for the record?
My name is David Porter, and I'm with Kinder Morgan, and do you want my home address or the?
You
company
can say your
address?
business address.
1001 Louisiana Street, Houston, Texas.
And can you tell us your educational background?
As far as my educational background, I have an Associate of Arts, I have a Bachelor's of Science degree, and I have a MBA as well. And I'm also a CMI, and I used to hold a senior property tax consultant license with the state of Texas.
And how long have you been in the property tax space?
Since 1982.
Can you state your employer and your position within the company?
My employer is Kinder Morgan, Inc. My position is Director of Property Tax.
And how long have you been in that position?
Roughly 10 years.
And what are your duties and responsibilities as Director of Property Tax for Kinder Morgan?
As Director, I oversee two employees who help me manage our book of business within the company. That includes filing returns or LAT 5s. It requires preparing valuation analysis. It requires sending out the LAT 5s when they're due. It also involves receiving notices of appraised values, making determinations as to what needs to be appealed, if anything. And it also means preparing those reports for the appeal process if there is an appeal. It would also mean getting the property tax bills paid after everything is complete.
And what is Kinder Morgan's relationship to the taxpayer here, IMT?
We are the majority interest owner for IMT.
And in your position as Director of Property Tax for Kinder Morgan, do your responsibilities extend to International Marine Terminals, IMT?
Yes, it does.
And do you have similar responsibilities for properties either in Louisiana or in other states?
Yes.
How long have you had responsibility for IMT's property taxes in particular?
Since 2007.
And are there any other properties that IMT owns, either in Plaquemines Parish or in another Louisiana parish?
Just Plaquemines Parish.
And you prepared the LAT 5s for the 2023 year at issue here today?
Yes, sir.
And did you engage Bob Adair of Advantage Consulting to prepare a valuation report for the 2023 year at issue?
Yes.
And is everything you are testifying to regarding IMT's operations, history, or financials made from personal knowledge, whether directly or determined through company records?
Yes.
And what documents did you review to prepare for your testimony today?
Basically notes from prior inspections, also prior LAT 5s and asset records of different kinds, including P&Ls as well.
Thank you, Ms. Porter. Can you describe briefly IMT's operations and history, obviously specifically the terminal in Plaquemines Parish?
IMT has been a bulk cargo terminal facilitating the export for outside of Louisiana, I should say. It can be domestic transportation, and it could also be international export as well. For bulk cargoes, it could be ores way back in the early and mid 2000s. Since then, it transitioned to basically coal. And then when coal became, when the coal market went into decline, then we had to substitute some of that coal with petroleum coke from local refineries.
And who are IMT's customers broadly? If you, if you don't want to name them specifically.
The primary customer is going to be Duke Energy.
And what is it, what services do you provide to Duke Energy?
We receive the coal that Duke would provide in our terminal, then we would load them onto a vessel or to a barge for transportation to Florida for their power plant in Florida.
So the facility is primarily, and using primarily, I mean probably the majority of its operations related to coal transportation and storage?
That is correct.
Okay. How old is the terminal at issue here?
The terminal's been in operation for roughly 44, 45 years.
And have there been any recent, and by that I mean, I guess I would say within the last 15 years, additions or remodels to it?
Yes, there was an expansion.
And what occasioned, or what was the expansion for?
The expansion was to increase the throughput tonnage from roughly 9 to 11 million tons per year to roughly 20 million tons per year.
And what is the terminal's current throughput capacity?
Well, the capacity really remains unchanged given the right circumstances.
So that would be about 20 million tonnage?
Yes, sir.
Okay. And what is the terminal's storage capacity?
I do not recall off the
Okay.
top of my head.
So getting into more specifics that are related to this year and surrounding years, what is the terminal's current throughput?
Well, that's roughly around 20%, I think.
About 20% of 20 million? So it's about 20% of its capacity.
Yes, sir.
And what is the terminal, if you know, the terminal's current storage?
I do not know. I would say we might have 1 to 2 million tons on the ground.
Okay, that's fine. What are the current percentages? You mentioned that you have tried to backfill some of the loss in coal revenue and throughput with petcoke. What would you say are the current percentages of coal versus petcoke, if you know?
I'm going to say it's roughly 50% for coal and petcoke.
And how does that number line up historically?
If I understand the question, basically that's high. In the past, it should have been a very, very small percentage of the total capacity of the terminal.
Now, that is, when you say it should have been a small capacity, do you mean the petcoke or the coal?
I'm sorry, the coal would be, the petcoke would be the small capacity for the terminal.
Okay, and so does that gets back to where you described before, that petcoke is generally used to backfill the loss in coal revenue?
That is correct.
Okay. Can you describe for the commission broadly the coal market in the last, I suppose you can talk about in the number of however many years you need to go back, but to talk about historically versus what the current market is for coal, whether it's transport, whether it's, well, all the things that you do, transport and storage?
Well, basically, we are similar to a toll road. Customers bring the coal in, and obviously, we help facilitate the transportation out of the terminal. Like every other market, there's going to be ups and downs and swings. At the time that we began to negotiate an expansion of the terminal, roughly 2009, and I think in 2010, 2011, we actually had new contracts with 3 or 4 major coal miners or mining companies. And after we began construction, the there began to be significant changes within the coal market. It began to decline dramatically, but we're already in process. You can't shut these things off, like if you go out to your car, you just turn it off and everything's fine. It just doesn't work that way. So we did complete the expansion. What did happen at that point was we had four of our coal customers that ended up in bankruptcy, two of which went completely out of business and had to sell off. Two survived, but I don't think they're providing coal to the terminal at this point. So the expansion was a significant loss to the company because it's not been, we didn't need it when it was completed, and we do not need the extra capacity today.
So the expansion in 2009 was in anticipation of an increase in the coal market.
Yes, that's correct. A lot of the Chinese were expanding, the Indians were expanding, and a lot of that coal was expected to go to foreign shores.
Okay. And based on your testimony, is it correct to say that by the time the terminal or the expansion of the terminal was complete, there had been a downturn in the market?
That is correct. And if you would like, I'll go ahead and explain that part. The
Sure.
downturn was largely due to changes within the political atmosphere within the country, the geopolitical issues regarding whether or not coal is a clean source of energy for, let's say, powering power plants or using it for smelting steel furnaces. And so that was part of it. The other part of it was the shale plays that came into existence, and a lot of the companies transitioned to cleaner burning gas versus using coal and having to spend a lot of money in scrubbers and other things that would actually capture the pollutants that come out of a coal-fired facility.
Thank you, Ms. Porter. Are you directly involved in IMT's Plaquemines Parish property tax assessments?
Yes.
And can you describe your involvement?
The answer to the previous question was yes. And can I repeat the question?
Can you describe what your involvement was?
My involvement is full cycle. I get the returns prepared. I review them, send them out, deliver them to the parish. I would try to work with the assessor's office through their representative on the valuation, and then we've received the notices, and then typically, historically, we've always found a way to come up with a value that we could both live with, and then we would pay the property tax bills.
Okay. And have you ever disputed and I guess Plaquemines Parish, which is the only place you own property, Plaquemines Parish property tax assessment through litigation?
No, not till this.
Okay. And so, but you have had disputes or at least differences in valuations prior to this year?
We had some differences in valuations, but as I said, we had typically been able to resolve those differences in an amicable way, and that was it. We were done, and then we would pay the tax bills.
Okay. And this is kind of a broad question, but what do you consider broadly when determining whether you're going to actually dispute a valuation? Is it, do you prepare an internal valuation for each year, for example?
Yes, we do. We prepare internally based on a cost approach as a first level. Then if we feel that we need to, then we can go to an income approach to the valuation. We're not likely to go to a market comparison approach because there's really not that much activity for this kind of a property out there in the market.
And as I understand it, for these purposes, you use the cost approach for this current valuation dispute.
Yes, we did.
And again, broadly and generally, what information do you consider when you determine valuation internally? It's historical valuations or valuations that have been determined by the assessor for previous years?
We would look at the historical valuations, whether prepared by us or by the assessor's office through their representative, and then we would also take a look at the throughput of the facility. Are we operating at 85% of capacity? Are we down to 20% of capacity? And then we would take and look to see what kind of inutility that, if any, that throughput might derive.
So you look directly at capacity and you look directly at obsolescence as factors when determining valuation.
Yes.
With whom did you work for in your previous, I'm not going to call it a dispute, but in your previous differences in valuations with Plaquemines Parish?
Wouldn't really call them different. Well, the differences would have been worked with Daryl Attaway with Pritchard Nabbit and also Wayne Frizzell with Pritchard Nabbit, the contract appraisal firm that the Plaquemines Parish utilizes for this kind of property.
And how far back, or let's see, how many of the 5 previous years, or which of the 5 previous years, would you say you and the assessor's office, or IMT and the assessor's office, came to a result in that manner?
All of them except for this year.
Okay. So that would be at least from 2018 up to 2023. Is that correct?
That is correct.
Okay. And did the valuations increase over those years, or what was the historical? I know part of this is going to be Bob Adair's presentation, but just to get kind of a general understanding of that from you.
I would say that they fluctuated. Perhaps if we had a one year that was better than another, there would be an increase because the throughput was better, and other years it would be worse because the throughput was worse.
So again, always with an eye towards capacity, the business and operations that you were actually engaged in, as opposed to what you could be engaged in, or what your full capacity is.
That's correct, yes.
There is obviously for this year, we're here before the commission in a litigation posture because there is a variance and a dispute between the two, the assessor and IMTs, and based on Bob Adair's valuation. What can you describe what accounts for the variation in the current valuation versus what you would consider for the previous years?
A big part of that might be the amount of obsolescence that's being used, whether it's the inutility due to the throughput, or maybe there was a change in the economic life for some of the assets. Our operations, like a mining operation, which typically have a much shorter life than many others. And so that's really the primary driver.
Right. And did you engage a third-party consultant to assist you in determining the company's valuation for 2023?
Yes.
And can you identify the consultant and his employer or company?
The consultant's name is Bob Adair, and the consulting company is ADIS.
And he did prepare.
I mean,
Advantage,
yeah.
yes.
I'm sorry. I have more than one firm that I work with. So yeah, Advantage. It just kind of hit me.
Your remit is broad, yes, sir. And did he prepare a valuation report?
Yes, he did.
Okay. And that is, I think, it. I would like the commission and the record to reflect that the valuation report is part of the stipulated evidence here. Thank you, Mr. Porter, and I'll turn it to you, to the opposing counsel, if there are any cross-examination questions.
Just a few follow-up questions. Mr. Porter, when was Mr. Adair engaged by IMT to prepare the 2023 report that is attached as your exhibit number 2?
In 2023.
What, do you recall the specific month he was retained?
I believe it was September, or maybe October at the latest, but September, I'm pretty sure.
but he was retained after LAT forms were due on April 1st of 2023.
Yes,
So can you tell me who prepared the information that was filed with your LAT form in April of 2023?
I did.
Can you tell me if the cost information that was included with your LAT form in April differs from the cost information in Mr. Adair's report that was prepared later in the year in September?
I believe his information is inclusive of the information I presented to him from the original LAT 5 and then updated with additional information after that.
Are you aware of, as to whether the information used by Mr. Adair in his September of 2023 report differs from the information that you used and submitted to the assessor with your LAT form earlier in the year?
I'm not sure I follow the question.
Okay, no further questions.
Mr. Chair, if I have a couple of questions for Mr. Porter, if the timing is right now. Mr. Porter, just to, I'll try to summarize what I understood, that Kinder Morgan is the majority shareholder of IMT.
Yes,
Okay. And you're employed by Kinder Morgan, and throughout a course of a 5-year span, as asked by by the attorney, you've used Pritchett and Abbott to, I guess, evaluate the valuation that's being performed internally by you and your team. And then in 2023, Pritchett and Abbott was not engaged, but Advantis was engaged. And as you said, issued a report in September of 2023.
we worked with Pritchard and Abbott, who actually is employed or contracted with Plaquemines Parish. We employed and entered into an agreement with Advantis.
Okay, thanks for that clarification. And just going back, I think you said that the major difference between 22 and earlier years to 2023 was a change in estimated life of certain assets. Is that correct?
I said it was a change in life, in the life of certain assets. I also said it was a way in which they might calculate the inutility for additional obsolescence for the plant as well.
And what triggered the change in estimated life? Was there just impairment on certain assets overall?
I can't speak to that. I was using the 15-year life on these assets, even though I believe it's shorter, according to the LTC manual. But you'd have to ask that from the district's representative, the assessor's representative. She in her valuation, she increased the economic life from what we had been using for all the years that I worked the property with her predecessors.
So for example, your internal records, your internal calculations, let's say, was using a 5-year life, and you're saying that the assessor then in this year moved it to a 15-year life?
Well, on certain assets, I would have been using a 15-year life, and they raised it or increased it to a 20 or 25-year. I think it was 20-year life, though.
And that was specific to 2023 and not in previous years?
That is correct.
Okay, thank you.
This particular assessment in 2022, the value was $33,248,207. That's 33,248,207.
Any other questions from the commission?
I have a question. I just want to be clear. So January 1st of 23, you're saying the capacity of the yard's 20 million, correct?
Yes.
And when did that become 20 million?
At the completion of the expansion, roughly 2014, 2015.
Okay.
I have one further question, Mr. Chair. In moving from coal to Petco, was there any cost incurred to modify the storage?
No, sir. They have very similar qualities, and that's why you can use them within the same terminal. It wouldn't, for instance, you wouldn't put certain, let's say, limestones or things like that in there because obviously the coal or the petcoke dust would contaminate those minerals.
Okay, thank you.
Any other questions from the commission? Okay, call you next witness.
Bob Adair will be our next witness, Mr. Chairman. And Mr. Chairman, and we had discussed this with the Assessors Council prior to this. There is a presentation that Bob will be presenting from. It'll be on the screen. It's not introduced as evidence. It is purely to facilitate the discussion, and we certainly understand that the assessor reserves the right to be able to object to anything in particular.
He's correct. We just received this yesterday. I went through it briefly. It's my understanding it's not being introduced as evidence or an exhibit. It's just used for demonstrative purposes. And if we feel the need to object to any individual slides, then we will.
That's correct. And I know the clerk will be, I guess, rolling up the slides, but I'm not sure, is it better for? Oh, okay, great. Okay, Mr. Adair will be. Okay.
This is my particular.
Okay, I'm glad y'all worked that out. I wasn't exactly sure. Okay, I think we're to get started. Can you state your name and address for the record?
Yeah, my legal name, which some may not know, is Bobby Glenn Adair. I am not a Robert. I'm Bobby.
And Bobby, what is your educational background?
I have an accounting degree from Stephen F. Austin State University with the economics minor.
And do you have any certifications?
Yes, I'm a certified member of the Institute of Professionals in Taxation and Property Tax that I've held since 1988.
And
And also, not that it's that relevant, but I'm a senior consultant, property tax consultant for the state of Texas.
for the state of Texas?
Yeah.
And any professional organizations or other than the state of Texas broadly, governmental boards or commissions that you've served on?
You mean industry boards and?
It could be. Could be
Okay.
professional and I didn't mention that, but professional industry or governmental.
Yes, I'm
commissions.
currently, and by the way, I retired from full-time in 2022. And I'll get into that a little bit more. But as part-time, I continue to chair the TCQ, Texas Commission on Environmental Quality, Tax Relief for Pollution Control Property Advisory Committee. And again, you might not think that's relevant to Louisiana, but I will add that it's composed of 13 members, roughly half industry and half government, including the Sierra Club. So there's a lot of give and take, or a lot of discussion there. Also, I've chaired, before I retired, I chaired the tax committee for the Texas Oil and Gas Association. And I chaired the property tax committee for the Texas Taxpayers and Research Association. And prior to that, for about 15 years, I chaired the property tax committee for the Louisiana Mid-Continent Oil and Gas Association, and for a few years, the Louisiana Chemical Association. I might be going too deep here, but that's
I
just
think obviously wanted to establish your background in this space, which I think is certainly understood to be extensive. And have you worked in any particular industries in-house where you work for a company as opposed to consulting?
Yes, I've only consulted part-time for since October of 2022. So I retired in early 2022 after almost 40 years. And in the oilfield services was my first job. And then and then for about 13 years with, in upstream, midstream, and downstream oil and gas. And then I went with a power company for 6 years, and then for another 15 years for back in oil and gas.
And can you state your current employer and your position within the company?
I'm a senior advisor with Advantus Consulting.
And is it, I was correct that you said you've been there since October of 22.
Correct.
Did you prepare the valuation report that we've discussed here that's dated September the 4th, 2023, and has been introduced in evidence pursuant to the joint stipulation?
Yes.
And who engaged you to prepare the report?
David Porter with Kinder Morgan.
And have you conducted valuations and prepared valuation reports similarly? Not necessarily for Kinder Morgan or IMT, but just valuation reports in the past?
I have, and you said similarly, so I will not get into the oil and gas upstream. I've done that. But I've done appraisals for refineries, chemical plants, terminals. I've done pipelines, state assessed pipelines, oil products terminals, liquefied petroleum gas terminals, and even petroleum products terminals like gasoline and others that at the, for example, at the New Orleans airport.
And how did your previous experience inform the valuation methodology and report that you prepared for IMT for the 2023 year in dispute here?
I would put that in two buckets, I guess. One is technical, and that is, I mentioned the IPT, Institute for Professionals in Taxation, the training there. I've also taken IAAO, International Association of Assessing Officers, classes to help with that mix, and American Society of Appraisers, textbooks, and other recognized sources. So that's the technical side. But I've also done practical side is those terminals that I mentioned and refineries, chemical plants. I've also recognized some of those appraisals over the years have been where the economics are relatively good, and there have been some times where it is pretty dismal. So I've seen a broad range of those.
And what sources, and some of this you mentioned, I think, in your previous answer, but what sources did you use to conduct the valuation and prepare the report for the 2023 year?
I used information supplied by David Porter, which is primarily the LAT5 and Louisiana Tax Commission rules and regs for the cost approach, and also income information. And applied that income information based on appraisal principles that were from IAAO and ASA.
And just for the record, can you state what IAAO is?
International Association of Assessing Officers.
And ASA?
American Society of Appraisers.
And did you use the official guidelines of the American Society of Appraisers?
I primarily relied on the textbook, which is Machinery and Technical Specialties textbook. For IAAO, I used their primary textbook, but also their glossary. It's an online glossary.
Thank you, Mr. Adair. And so we are here because obviously it's been discussed, and as we know, there's a significant variance between the value you determine for the property at issue and the value that the assessor and through its consultant, Pritchard and Abbott, use. As I mentioned to the commission, you're going to be going through briefly a presentation, but just kind of leading into it and just broadly, can you explain just on I guess a general basis before you get into some more technical things that thankfully you do and that I don't have to do every day, but the principal reasons for the variances?
Yes, I did an evaluation of that, and roughly 82% of the cost on the LAT5 relates to the M&E category, the last category on the LAT5, And that's, like I said, about 82%. So that is, that relates to physical depreciation. There's a difference in 20-year life that Richard Nabbitt applied versus 15-year life. And that's about 47% of the difference. The remainder of the difference is obsolescence, difference in calculations.
I am going to now, and this is really going to be an open-ended question, so that you can get into your presentation here. But just to ask you to go through the sources and methodology that you used to come to your evaluation, which is at issue here.
Okay, thank you. First, we'll just go to the next one. Okay, I think he's already pretty much covered that. See if there's anything in here that I think I should cover. I didn't mention over 35 years or something like that. So 15 states, about 20 plus other states that had some experience. That's probably enough. I don't want to elaborate too far on
Can I
that.
just interrupt for one moment? Since this PowerPoint is not going to be introduced as evidence, if I could ask Mr. Adair, when you're testifying, can you reference the exhibit number that you are basing your testimony on so that we can refer back to the actual exhibit number?
Yes, yes, it's on each slide.
It's on,
Is that
right.
what you're saying?
Yes.
Okay, I'll do that. I'm sorry, you're right. So it's not an
The
exhibit.
PowerPoint's not going to be introduced.
Right,
So
okay,
later
gotcha.
on, we won't know necessarily which exhibit you were talking about, even though the slide references the exhibit. So if you could say out loud
Okay,
on-
well,
and on
I'll
the
do it.
record the
Got it.
exhibit.
Okay,
And just for speed this along a little bit, Mr. Adair's testified before this commission several times. We're very versed in his experience and stuff, so let's move this along.
yes, that's why
Thank
we're
you,
going to
Mr.
the next one. All right, so the vicinity map, I won't go spend much time on this. I think you generally know it's down below Bell Chase. And we'll go ahead and go to the next one. The property description, there was a question earlier about the storage capacity. This is from Kinder Morgan's website. And by the way, this is on page 2 of the 2023 valuation report, and it's in the joint stipulation. And so I think that's the only other thing that was not described there. So we can go to the next one. So as I mentioned in the report, this is not by any means to instruct the assessor of what the law is, and I'm not an attorney, but it was just an acknowledgement that we are aware, or that I'm aware of what the valuation parameters are for valuation for property taxes. That's all. That's the only reason this was in there. I will, sorry, go back. This was on pages 2 through 4 of the 2023 valuation report, dated September 4th, 2023, also in the joint stipulation. So the next slide. I'll comment just on a couple of items here. And in this, as stated in the, well, catch up here. Although uniformity is certainly understandable, I want to comment on the fair market value, in particular the last part of it. Fair market value property shall be determined based upon the individual characteristics of the property that affect the market value of the property. So this is on page 3, 2023 valuation or property taxes, September 4th, 2023 by Advantis in the joint stipulation. I think that's, also to make a point that, but I think I'm good there. We can go to the next one. So in this one, I used appraisal logic basically to estimate the appropriate economic life and all 3 forms of depreciation. And by the way, this is on page 3 of the 2023 valuation for property taxes in the joint stipulation. As we're all aware, there are 3 forms of depreciation: physical deterioration, functional obsolescence, and external obsolescence. But I want to draw your attention that I did this to calculate to the RCNLPD, which is reproduction cost new less physical depreciation. And then I legitimately considered and appropriately recognized adjustments to that, meaning obsolescence. So that was the next phase. Now, and I'll show you the numbers in a couple of slides. So this one, it is not specifically in the joint stipulation. However, the 15 years is in the cost approach that's in the joint stipulation. And I'll note that is mislabeled 20, although you'll see the composite multipliers do say 15. So this is, and I'll admit this is my logic, because LTC table 2503A does not have equipment for the IMT terminal, or it doesn't have coal terminals, doesn't have those type of terminals. However, I try to look through and see properties that is listed in that table, and what might be best suited, so I could calculate an estimated economic life. So, and as Mr. Porter said, and from discussions with Kinder Morgan, that the mining, milling, and quarry M&A is the most applicable to IMT. And that is, and you'll see that I put 40% weight on it. Actually, it could have been probably a little more, but I was conscious of certainly not wanting to lowball the economic life. And there are others, cranes, for example. There are 1 or 2 cranes there on site, so that one's clearly applicable. It does say a 20-year life. The lumber and wood products, those are vaguely comparable. The log stackers is more because it's outside property, like the property is at the IMT facility. So that's why I put more weight on that. Then you've got some warehouse equipment. So when you calculate all that, weighting it comes to a 13.2 life. However, the 2503, and by the way, this reference 2503D should be 2503C, which is the percent good factors. It is, there's no, in 2503A, the years go from 12 to 15 years. There's no 13 year. So that's why we use 2503 C year 15. In other words, we round it up to 15 rather than down to 12, which was the other options. So that is again, economic life for equipment. And that was applied just again to the 82% of the costs roughly, which was the last M&E category on the LAT 5. So go next. So in utility is one form of obsolescence. It is oh, sorry, I got to push the button here. Maybe I could put a little weight on this or something. Oh, good. Yes, thank you. All right. Thank you. Thank you. So under the principle of substitution, I will not read this to you, but there is the in-utility formula can be used to measure a form of EO, which is external obsolescence. And I'll point out that it does not, which is the last sentence is highlighted, it does not address the broader elements of EO that affect the business, such as the economics of the industry. And I will also, I may have neglected, Ms. Dunbar, I apologize if I neglected to say the previous slides, but this one is page 6, 2023 valuation for property taxes, September 4th, 2023. Did I miss any on the others? Don't need, okay, all right. Okay, we can go to the next slide. So now we're getting closer into the formula. This is the formula, and you'll see the actual numbers on the next slide. But for in-utility to be applicable, it doesn't need to be like a 2-month shutdown of a plant just for some repairs, or a hurricane down for a temporary period. It needs to be for some time, as this says. So this is, I won't go through every part of the formula, and you'll see how the numbers work on the next page. But this is page 5 of the 2023 evaluation for this property. and it's in the stipulation also. It's also mentioned that this is also in the American Society of Appraisers. And that is also referenced in the appraisal or the valuation. So now we'll go to the next one. So the exponent in the in utility obsolescence formula is you might recall from the previous slide that it was there was an exponent up there, and this is the first source that says it can be a wide range from this exponent from 0.38 to 0.90. However, the average is around 0.6. And well, if you'll click the next bullet, sorry, I've got some of these just coming one at a time. So with another name is the 6/10 rule, which is it's widely recognized as its common reliance as the 0.6 if no better information is available. And I say I didn't have additional information, not that it wasn't available, it's just it could be very time consuming. And when I was asked to do this evaluation, we did not have a lot more time to dig into this. And speaking of that, we'll go ahead and go to the next one. That's the last one. So again, this source says its average is near 0.6. So in all of my evaluations over the years, I've seen the range primarily from 0.5 to 0.7. That's typically where most industrial or properties like this fall. So now we'll go to the next one. And so there are primary reasons as mentioned earlier. And Duke Energies it has been providing 3 tons per year, or 53%. And this is on page 7 of the valuation for property taxes in the joint stipulation. And also it's, as Mr. Porter mentioned, there's a combined cycle in Florida that they provided this to. However, since two combined cycle natural gas plants started operating, they shut down those 2 coal plants, which cut the need or the demand significantly. So it's 2023 forward is estimated to be around 1.5 million tons. So the next, the limestone is another, there's another large projects in Plaquemines Parish. So this was another example of trying to temporarily fill the revenue needs of a project, and that business is expected to go away. And there's, you can go to the next one too. So these other items are other primary reasons for the long-term low utilization. So and I'm conscious of you, Mr. Chairman, since you mentioned earlier to move this along. I'm trying not to go too long on this, but feel free to slow me down. So now let's go ahead and go to the next slide, because this gets into the meat of it more. Because as you'll see, back from 2017, it was around 18%, and it went up some in 2022. And by the way, if you zeroed out that temporary limestone one, then the throughput will be 19.2%. And as you can see the weights on this, this is a 3-year weight to get to the highlighted part of 19.6. And the weights are basically zeros in 2021, primarily because Hurricane Ida shut down the facility for a while. And I didn't think a hurricane year was representative of when that throughput should have been calculated. And also in 2018 was a high point that based on my visit to the facility and discussions with Mr. Porter, that higher percentage is likely not to be repeated. So to put a lower percent on that, and you see the minimum to the maximum range, but ultimately the 19.6%, I believe, yeah, that is what I landed on. And this is in the cost approach, which is the 2023 valuation for property taxes September 4th, 2023. It's in the joint stipulation. Doesn't have a page number on it, but it's in that cost approach. So the arrow pointing down, that's actually pointing down to the next page. So you'll see that that's where it's coming from. So if you apply that formula to this formula, then you get the 62.4%. This is, let's see. Yeah, see the one coming from, that's G20, cell G23 is coming from the previous page, which is 19.6. I know I'm getting detailed here. I apologize. And then the next cell, C40, is the 0.6 exponent. If you apply those, then you get a rounded up factor of 0.38% as an obsolescence factor. So which didn't mention earlier, but the obsolescence factor is the inverse of obsolescence. So the obsolescence factor is 0.38% in this calculation. Now, how does this apply to the cost approach to value? That's where the next two slides will summarize that. I applied it to the dock and to the last, you can go ahead, yeah, that's fine. I did not apply it to the other categories, which you might want to go back one if you can, if it's easy. My logic for not applying it to those other ones is because it's mobile equipment. If you were to sell that property, it would be more easily available to the open market. Whereas the dock and the equipment in the last category are more affixed to the property, to the IMT terminal. So it's not mobile. In other words, that's whatever that sells for, it's there. So that is so that arrives at a facility value of no more than 25.5 million rounded. And I will say again that the inutility factor is only one form of obsolescence. So if we were to take a deeper look, it would have been a lower obsolescence factor because it didn't even get into the economics. The inutility factor just talks about the volume, the lower volume. So we'll go to the next slide. Now there are consideration of other approaches that is indicated on page 8 of the 2023 evaluation for property taxes, also in the joint stipulation. There are 3 approaches to value, and I'm not going to dwell on this because I realize the commissioners know this very well, but just for the record, there's I mentioned the cost approach. Now there's a sales comparison approach. I did not apply this approach as I was unaware of any similar terminals in the region that sold in 2022. However, the income approach I did take. So I mentioned we did only a cursory income approach, and I got to tell you that cursory income approach was basically looking at the cash flow that I just received from Kinder Morgan and just doing a direct cap, just a kind of a back of the envelope. It was a very cursory income approach, and it showed that it was much less than the cost approach to value. So that gave me comfort that I was okay with the cost approach to value. So okay, we can go to the next one. Since this was included in with our information that we gave to the assessor before the board of review, I'll explain this somewhat. And basically the income, the last column, which is the operating cash flow, that comes from the next page, and we'll get to that in just a minute. I'll explain it in more detail. I'm doing a high level, and then I'll go down a little bit. So this is also in the stipulation, discounted cash flow for 2023 property taxes. So for 2023 through 2028, that's the discounted cash flow period, and typically discounted cash flows for industrial type properties anyway, it's from a 3 to 5 year time frame. This is a 6 year time frame, and then the remaining part is called a terminal value, and a terminal in that case, in that sense, has nothing to do with this being a terminal. It's just mean that's the sale price, estimated sale price, which is why I didn't call it a terminal value for confusion. It's the estimated sale price in 2029. However, that needs to be discounted back. That calculates net present value for the IMT business of 33,363,000 rounded. However, that's for the business. There are other accounts that are on in the business that should be deducted to get down to the value of the account. And I mentioned earlier in my testimony when I was answering questions that I've observed properties that are in relatively good economics and some that are rather dismal. And this falls in the latter. It is very much in the low end of economics. So 9 million is significantly lower than the 25.5 million that I had for the cost approach. So I'll share this. And this is marked confidential. I realize that we're in a public hearing. However, it is sensitive data to the company. But we're showing this for purposes of showing how we did the discounted cash or the cash flow analysis. And you'll see the highlighted areas, those cells, those are all on the previous slide. They're just loaded in. You can go back if you want to take a glance at it, like 7,481,000. See, that's the top one. 3,000,004, and 38,325. Those now you can go to the next one. Those are they all came from that slide. So that's, in other words, this is the cash flow, but we need to discount the cash flow, which is what we did on the other slide. So I will. There's been some. I'll explain a little more the following pages, since those were okay. We'll go to the next slide. So this is the what is DCF terminal value, and again, terminal has nothing to do with this being called a terminal. A terminal is the end of the discount period. So it's not the discount period, the cash flow period. So terminal value is estimated price beyond what they call the explicit forecast period. So there are two ways to determine that value, and one is perpetual growth. And in this case, well, that's usually done by more academia. Let's go to the next slide because that explains what the exit multiple is. So which is the most common? The most common by business is certainly the exit multiple. And to do that, the most primary method is a multiple. TV in this case is terminal value. So terminal value equals some metric. In the case of, and I use EBITDA, earnings before interest, taxes, depreciation, and amortization, times the trading multiple. In this example, it's 10 plus. This is also noted as in the DCF terminal value formula article that was included. So we'll go to the next slide. We're getting closer to the end. So okay. So these are EBITDA multiples from 2023. It was published in February of 2023, and I use these as an example. That these are published in EBITDA multiples. In addition to these sources, they're in numerous textbooks, but these three items are most closely related to IMT. You'll see coal as 3.01, and the other two are around 2.5. So those are and again, to remind you, what I used was a 5 rather than this lower number. And again, my intent was not to be too low on the valuation. I didn't want to lowball, or however you want to call it. I didn't want to underrate the value, even though it does come across as being relatively low, but that's because of the economics and underutilization. So that gets to the end, and with that, I'll be glad to take questions.
Into the witness.
We don't have any questions.
Any questions from the commission? None? Okay.
I'll just say, wow, I don't know how we were, all of those numbers drilling down, use the cost approach.
Yes, sir. I
Your
relied primarily on the
conclusion was
cost
on the
approach.
cost
Yes,
approach.
it was. On the higher end. Yes, yes, sir.
And would you revisit that calculation with the one minus the 1.196 times 1 times 0.6?
Come back up. It might help if we have it on the screen again. Or I can just speak from it either way. Keep going. There, next one, probably. Okay, one more. Okay, that's where you get the 19.6. Okay, go to the next one. Okay, is that the one you're talking about?
Yeah, so it's 1 minus 0.196
Uh,
times 0.6 times 100.
It's 1 minus 19.6% to the, in the caret, this is an Excel formula. So that makes it an exponent. I apologize, I did not have a,
The 0.6 is an exponent of the
Yes.
difference of 1 minus the 19.6%.
correct, that's what the C40 is, it's the 19, it's the, yes, the 0.6 is the C40, which is the exponent. And by the way, I did not, if you multiply, the actual formula says times 100, that just gets it to the 62.39. In my calculation, I didn't multiply it times 100, I just left it at the percent.
Okay, thanks.
Do we have any other questions? Anything? All
Thank you
right.
for asking.
Hey, you're welcome. All right.
And that is the end of the taxpayers presentation, Mr. Vice Chairman.
All right, to the assessor.
Good morning. Thank you, guys. Before I turn it over to the experts, I'm going to take a minute just to highlight a couple of key points. The original 2023 fair market value as determined by the assessor was $58,295,640. That's 58,295,640. That was developed using the required guidelines set forth in Chapter 25 of the LTC Rules and Regulations. The Board of Review and LTC appeal from the taxpayer was a requested market value of $25,559,780. That has to be, that is excluding inventory, which is not subject to the appeal number. The assessor's office and Pritchard and Abbott applied an obsolescence factor of 69% good using the widely recognized Chilton factor that analyzes the prior year's production and capacity. That formula and support can be found as Exhibit 11 in the Pele exhibits. It's very clearly lined out and explained where she developed that. The taxpayer requested that we consider an income approach. We did. The income approach developed by IMT did not include the data to support the provided income approach, and we requested additional information, but were not provided that data. That email correspondence is provided as Exhibit 13. To further support that we did consider all applicable approaches to value, Pritchard and Abbott developed a mock income approach, which is included as Exhibit 15 in her appellee exhibits. No weight was given to this approach as the assessor's office was not privy to the financial data used to develop it, required to develop a reliable income approach. I'm going to turn it over to Ms. Khan, but I wanted to make it abundantly clear that the assessor's office and Pritchard and Abbott have reviewed the valuation from all perspectives, given all the information provided by the taxpayer, and feel that the $58 million value includes an appropriate amount of economic obsolescence and takes into account everything that they gave us. So thank you.
Thank you. As she said, my name's Karen Kahn. I work for Pritchard and Abbott. If we can start with Exhibit 1 of the appellee exhibits, I'm kind of going to follow along through this. The first one says up. They have my exhibit.
She has appellee exhibit,
One. There were 17 exhibits. Yeah, that's not my exhibit.
Mr. Chairman, if I would, do you all have copies of that, physical copies of it?
And I have them digitally on my laptop.
Okay, look, while we look for it, we're gonna take a 5-minute, you got it? We're gonna take a 5-minute break. That's okay with everybody? No objection to that? We're gonna take a quick 5-minute break.
Yeah.
Let everybody stretch